Good morning, traders. Forex market, welcome back. Tuesday today. We're looking at the S&P 500. We want to run this one against the gold, just as we did 8 days ago when we were here. So basically, this is like the futures day, the futures analysis day today. We like to run them against each other because they supplement each other and they kind of contribute to our general understanding of the market in general, but also for the forex market more specifically. And we're going to start with the S&P 500. You know, under normal circumstances, the gold and the S&P 500 have normally a low level of correlation between the two. But these are not normal circumstances, and where there's a high level of fear in the market, which is pretty much what we have right now, the gold behaves differently, right? It becomes a safe haven. So it's switched. The correlation becomes strong, but it also becomes inverse. So when the S&P 500 tanks, we see the gold basically hammers, and vice versa. So let's have a look here, just saying that, giving a bit of a correlation background. Now we'll analyze the very specifics of the technical situation here on the S&P 500. Now you remember we were tracking last month in quite an awe, where we kind of figured out that price was going to spike that area and eventually come all the way back just to close right on top of that level, which was our main point of reference right from the beginning, 30.83, and that's a bearish sign usually. Having said that, all across this month, price had been pushing forward. So is that a genuine breakout, or is this another trick, like another trap, basically, just as we had last month, right? It's possible that we might, it's literally 50-50% on this one here. So we just can't take a decisive stance on this one until we figure, until we have another monthly closing bar. Because if price will stay above 30.83 by the end of the month, then we'll know with a high degree of certainty that price is breaking. And then we will probably expect the gold to switch and begin to move downwards, right? Because we're going to talk about the gold in the next video, but basically the gold also breaks up. So it's a bit suspicious to see both moving upwards. We think one is deceiving us. The other is probably going genuinely on its track, but the other one is trying to fool us, basically, setting some trap. I have to say this. We suspect it is the S&P 500 that's trying to fool us with this bullish breakout. At the end of the day, we know it's very sensitive here, right? We have the pandemic going on. We already know a second wave is right around the corner, not to mention breaking out full force in some areas. So what's going to happen here in the S&P 500? I think it's quite obvious that we might have another dive, right? And seeing the gold continue to hammer kind of suggests that this one might be a bullish trap. So we're going to be waiting here for a few more days. It's easy to see how price can continue to trade sideways, at least sideways. I'm not even talking about full-fledged downside reversal, but it's easily can trade sideways, which means we're going to have a few drops here on a local level, right? So yeah, it really all boils down to how this month is going to end for us. That's going to give us that reconfirmation for either a full-fledged downside reversal or a breakout, right? So it's either a breakout or a fake out. That's the bottom line of this analysis on the S&P 500. We will be back, next week to follow up here and give you the update on the specifics. Let's move on to the gold and see what we can extract from its technical situation to reflect on this one. So stay tuned. We'll see you in the next video.